We're trying to do
another day, another fight back. After yesterday's fuel protests, the Prime Minister and the Chancellor shifting the focus away from the tax on petrol and diesel and on to what they say is the real cause of the pain at the pumps, the huge rise in the global oil price.
I think we all know that the global economy is facing its third big oil shock of recent decades. And while in the time I was Chancellor, the oil price went as low as $11 a barrel, it's now as high, I think, today as $130 a barrel. And I think all of you know the impact that's having on household bills. It's on the prices at the petrol station, on the prices of gas and electricity, and the follow-through for prices of consumer goods like food. And I think every family in the country is affected by what's been happening in the oil markets in recent months.
This meeting with North Sea oil producers about helping them speed up their rate of production. The problem, convincing them to invest in new infrastructure for a dwindling resource of oil, and even if they did, the impact on global prices, analysts agree, would be negligible.
We think this year the North Sea will probably produce about 1.4 million barrels a day of crude oil on average. That's in an 84 million barrel a day market. So it's a relatively small portion of global supply. Of course, it's very important for the UK.
The rise in price up to $135 a barrel is a complex phenomenon. Most obviously, demand is up hugely, rising by 3% a year as opposed to 1% a year in the late 90s. China's and India's rapid development the main driver. Supply has been hit by instability in the Middle East and Africa, and there's little spare capacity in the system, all of which makes energy commodities attractive for financial investors, which along with a falling dollar helps fuel the surge in the price of oil. Gordon Brown's point that people are paying the price of a global economic phenomenon is also his problem. Few believe giving North Sea oil producers a hurry-up will have any impact on that. Heavy hints have already been dropped about shelving October's scheduled fuel duty rise and revising the changes to road tax. Both measures would require the government to spend yet more political and financial capital, scarce resources at the moment.